So this afternoon, the CPA emailed me and asked, what's the threshold that should be used in distinguishing internal control weaknesses? And my answer to him was there's three potential internal control weaknesses, and they are material weakness, significant deficiency, or other. So the first thing we're going to do is determine whether or not the internal control weakness is number one or number two. And the way I do that is I ask myself, could a misstatement occur that is greater than materiality? If the answer to that question is yes, then I have a material weakness. If the answer is no, then it's either going to be number two or number three. In other words, a significant deficiency or an other deficiency. So first thing, ask yourself, would this control weakness allow a misstatement? In other words, could a theft occur or error occur greater than materiality? I use $100,000 in this example, but you'll want to look at your computation of materiality. Also, this example references a general fund in a government. If you're auditing a commercial business, just look at materiality for the business as a whole. Okay, so ask that question, could a misstatement occur above materiality? If the answer is yes, it's number one. If the answer is no, it's number two or number three. Now, why does this matter? Well, number one and number two have to be reported in writing. So if you're doing a governmental engagement subject to Yellow Book, you'll put those findings, those control weaknesses in the Yellow Book report. If you're doing, say, a commercial audit, not subject to Yellow Book, then you're just going to put it in your internal control letter. Okay, once you make this determination, then we're going to look at the second part of this equation, and we're going to ask, is the control weakness a significant deficiency or an other deficiency? And the way I make that distinction is I ask another question, and that question is, would a board member need to know about this control weakness? I give a couple of examples here. In the first example, say $500 is stolen. It's not material, but you know what? A board member probably would want to know about that. So if the board member desires to know, at least you think they do, then it's a significant deficiency. If you think a board member really, wouldn't be interested in that, then it's an other deficiency. So the second example I have here is, let's say the client computes the allowance for uncollectibles on receivables, and they make a $500 mistake. A board member probably doesn't care about that, so you could deem that as an other deficiency. Now, if that's the case, what I'm going to do is I'm going to verbally communicate that control weakness that allowed that misstatement. I'm going to talk to the client, maybe the person that computed that allowance. Then I'm going to document in the work papers that I had this conversation, say, with Joe Johnson on July the 18th, and this is what I said to Joe. You need to document that conversation in the work papers if it's an other deficiency. Again, if it's number one or number two, it has to be in writing. Number three, it can be communicated verbally. You could put an other deficiency in writing if you wanted to, but you're not required to. So I hope that helps you understand internal controls and how to report those. Thanks and have a good day. Bye now.